All right, we've been talking about SpaceX all day, and for investors, we've talked about the challenge of just even trying to value a company like this. But there's another big issue, and that's corporate governance. For the city of New York, the city comptroller, Mark Levine, sounded the alarm on Musk's structure, warning that public shareholders would acquire the majority of the economic exposure without a corresponding proportional voice. Of course, a lot of this refers to what we now know after seeing that S1 is the idea that Musk is basically controlling the entire show over there. Joining us right now is Mark Levine. He is the comptroller for the city of New York. You're basically our CFO, if you will. You oversee, and the reason why this letter matters is you oversee the main pension plans here. So about $280+ billion of money that belongs to the residents of the state of New York, or the city of New York. And one way or another, to a certain degree, you're probably going to end up owning SpaceX shares. What is your main concern? And is there a way that you can avoid, I guess, whatever this potential corporate governance issue is?
Look, we own SpaceX now in the private markets, and once it goes public and enters the S&P, which it appears it will be expedited to do, through indexing, we're going to own a large amount of stock in the public company. And I'm okay with founders who want to exert control. I get that. But what Elon Musk is doing here is taking it to a whole new level. This level of control, dominating shareholder power, no independent board, occupying both the CEO and chairman's role at the same time, really eviscerating shareholder rights to sue and take other actions. And I represent shareholders. We have a $325 billion pension fund. We probably have 80 billion plus in indexing. So we're going to be a major shareholder in SpaceX. And I think that efficient capital markets require democratic governance and transparency, and it appears we're not going to get that out of SpaceX.
The letter that you sent, it also included the heads of a couple of other pension plans. And I do wonder, is there any sort of regulatory or legislative change that could be made to address, and this has been a growing problem for a while. We had a lot of the same concerns with Tesla, and it's not just Elon Musk. There have been other sort of tech companies out there where the founders have had outsized voting power and power over their boards in a way that basically meant that if you were a shareholder, certainly a passive shareholder, you basically had to take whatever they gave you.
Yeah, this is a trend in Silicon Valley. Of course, we'll see it with Meta, et cetera, and Google to some extent. But this is going way beyond what we've seen in those companies. And so, yes, I've joined with the state of New York comptroller and the head of the largest pension fund in California. We have $1 trillion in assets combined. And so we're making our voices heard. We are presumably all going to be major shareholders after the IPO, and we're going to continue to be active. As for regulatory help, it does not seem that that's coming, certainly during the Trump administration. So I think it's on us as major shareholders to speak up for our employees and retirees, and also millions of shareholders around the company who also are going to have money in index funds, retirees in the private sector, and they deserve democratic corporate governance as well.
I do want to ask you just about kind of the overall trends right now that we're seeing right now with artificial intelligence. I mean, by almost every objective measure, this does seem to be like one of these big transformational moments in our economy, in our society. There's going to be good with that, but there's also going to be bad. And I do wonder as to, particularly in your role, how you find the balance.
Look, this is very much a New York story. I think more than people realize, our economy is tied up in New York City with the financing of AI, so we've gotten a huge upside from that. In the last few years, we are financing the data center boom, among other things. Also, this is the capital of white-collar work. We have 1 million people who come to office buildings every morning in Manhattan, careers that are very exposed to AI. So depending on where this goes, we could get an enormous economic boost, or we could pay a real price. And my office actually issued a report today where we looked at 5 scenarios ranging from very good to very bad. Whether we have an AI bubble burst, whether we have an actual supercharge in productivity that benefits the city more broadly, whether we lose jobs. We're not even having this discussion right now in local government. We're not doing anything to prepare. And we're headed into unknown territory.
What's the potential scenario? I mean, when we talk about white collar, and let's just take finance, because, I mean, there's been a lot of talk, particularly with a certain research job, certain types of investment banking jobs, the idea that you could maybe potentially replace some of those human beings with whatever the AI tools are. Maybe that's not right now today, but most people think that will be very close in the future.
I think we might already be seeing it, and we have some data in New York that is very interesting. For the first time ever, the unemployment rate among young people in their 20s in New York City is higher for those who have a college degree than those who do not. We've never seen that in the data, going back decades. That, to me, can only be explained by the fact that companies that have white-collar workers are slowing down, bringing on entry-level talent. This is an early sign of what could be accelerating. By the way, talk to any person in their 20s in New York City. Breaking into the job market is brutal right now, and I think this is partly what's driving that. I expect it to be accelerated. What are the most exposed sectors? It's finance, it's accounting, it's business services, it's media. Those are the pillars of New York City's economy. Right. So we here need to have a plan to deal with this. If we take a hit to our budget, if we have a lot of unemployed people, and the plan I put out today calls for us to start to build up a reserve fund so that we can handle that uncertainty when it hits.
With regards to that reserve fund, are we talking about something that would be temporary in nature, or are you talking kind of long-term, almost endowment-like, if you will, to sort of supplement what gets lost?
Yeah, it's almost like a sovereign wealth fund for New York City. We have a mechanism. We have a rainy day fund. It's very tiny. It's only about 2 or 3% of our total tax revenue. It's not going to be enough to get us through the kind of turbulence that I'm talking about.
Is the mayor on board with this?
I hope so. We're pushing hard. It's not easy because we need to get the money. I'm going to be fighting for this. Our budget's due in June. This is going to be a major theme for me between now and then and beyond.
Well, when we talk about sort of preparing New York City for what the future might be, how real do you think this threat is compared to the multitude of threats? I mean, it seems like every 2 years somebody says, New York City is over. All the people in Wall Street are moving to Florida. You had the COVID pandemic. You had this, that, and the other here. Why should I take this more seriously than all those other threats, which we now know, at least long term, did not sort of end up being the bust that we thought?
You're making a really good point to your viewers who are not in New York City, who think this is a hellhole right now. New York City's booming by almost any measure. Commercial real estate leasing is on a tear. The best it's been in 20 years. We had 65 million tourists here last year. You can barely walk in Times Square right now. Crime is dropping here. In many, many ways, demand for luxury housing, for all housing, is off the charts. Rents, off the charts. As of today, May 21st, 2026, we're doing well. We have overcome the naysayers again and again. But I think that AI needs to be seen as unprecedented. And yeah, we did great in the internet boom. New York City has thrived since the internet boom. But I don't know. We don't know. We could see another boom built on this. If we are the capital of AI, applied AI, we continue to finance this. But we have to be ready for the downside. We're not, and I put out my report today to sound the alarm.
Do you have confidence, if I brought you back a year from now, that we'll be prepared?
We are very far behind right now. This is not a major topic, even of discussion in local government. Maybe we're hoping on the federal government to save us, but I'm not optimistic about that. Cities need to start taking charge because cities are on the front lines of this because of the nature of office work. And I'm hoping we can lead the way in New York.
Mark, really appreciate it.
Thank you.
Mark Levine, the Comptroller of New York City. This is Bloomberg.